Hello students, today we'll solve the sixth problem in our NPO chapter on page 117. Now this is the receipt and payment account which is given. Let's see the postings. The opening cash balance, we need not record it anywhere. We start with the subscription. It will be shown on the credit side of income and expenditure account. Donations, since it is general, on the credit side of income and expenditure account. Interest in investment on the credit side of income and expenditure account. Proceeds from charity show, again on the credit side, that is the income side of income and expenditure account. Let's see the payment side. Medicines purchased, there are adjustments on this which we'll be discussing. It will come on the debit side of income and expenditure account. General expenses, debit side of income and expenditure account. Salaries, stationery, charity show, surgery and dispensary expenses, all this will be shown on the expenditure side of income and expenditure account. Equipment, these are the equipment purchased which will be shown on the asset side of balance sheet. Then your closing cash balance and bank balance will be shown on the asset side of balance sheet. Now these are the adjustments given. Here the fourth adjustment, value of equipment, this will go to balance sheet asset side. Building again will be shown on the asset side of balance sheet. Capital fund on the liability side of balance sheet. And investment on asset side of balance sheet. Now we discuss subscription. In your receipt and payment account, subscription rupees 52,000 is given. And in the additional information, that is your adjustment, we have subscription due, that is your previous year outstanding subscription which has been received in the current year. Then 350 rupees is your outstanding subscription for current year. 600 is your current year subscription which was received in advance in the previous year. And 150 is your next year subscription which is received in advance in the current year. Now this 52,000 subscription given in the receipt and payment account, will be showing it on the income side of income and expenditure account in the inner column, as we have to do all the adjustments. Now rupees 310 as subscription received for the previous year, we deduct it from the subscription as it is not your current year income. Then 350 rupees is your current year income. We add it in the subscription. The second effect will be shown balance sheet asset side outstanding subscription for current year. Now rupees 600 was your current year subscription which was received in the previous year. This is your current year income. So it will be added. 150 rupees your subscription for the next year which is received now. It is not your current year income. So we deduct it from the subscription, and the second effect we show on the liability side of balance sheet as advance subscription for next year. Now here students, rupees 310 and rupees 600, we have given just one effect because one effect already appears in your previous year's balance sheet. Medicines purchased 41,000 which is given in receipt and payment account will be shown on the expenditure side of income and expenditure account. Now here we have to do the entire adjustment and we have to write the amount of medicines consumed during the current year. So here your opening stock rupees 8,000 and purchases rupees 41,000. That means we have medicine worth rupees 49,000. Out of that 11,000 is not used, which is our closing stock for the current year. So we get 38,000 as medicine consumed for the current year. This 11,000 closing stock will be shown on the asset side of balance sheet as stock of medicine. Now let's see how all this will appear in the income and expenditure account and balance sheet. Now students, this is the income and expenditure account and balance sheet. These are your postings from receipt and payment account. Now let's see the adjustment effects. As discussed, this is the adjustment effect of subscription. This is the adjustment effect of medicine used. Then we move on to depreciation on equipment. Less from equipment, outer column amount 23,100. The second effect, income and expenditure account, expenditure side to depreciation on equipment 1,900. Then depreciation on building rupees 1,500 deducted from building on the asset side of balance sheet, outer column 38,500. The second effect, expenditure side of income and expenditure account, building 1,500. The total depreciation 3,400 in the outer column. Now we have done with all the effects. Let's close income and expenditure account. When we close income and expenditure account, we get the total of 88,520 on the credit side, which is greater. And so we get a surplus of 15,820. Now we add this surplus in capital fund on the liability side of our balance sheet. We get an amount of 1,86,760 as a closing balance of capital fund. Now take the total of liability side and asset side. We get a total of 1,86,910 on both the side. Our balance sheet stands tallied. I'm sure you have understood this. Thank you.